Hello and welcome to Car Dealer Live. I'm James Baggott. I'm the founder of Car Dealer Magazine, and today we're talking the very latest with used car prices with Derren Martin, Cap HPI's Director of Valuations. Derren, hello. How are you? Nice to
Yeah,
see you.
yeah. Hi, James. Yeah, I'm good.
Good, good. Thanks for coming back on. I know we've had a little bit of a break in our videos. Very interested to hear what's happening out in the market. I mean, perhaps you could just give us the latest. It feels pretty strong. Is that right?
It definitely does. The average movement down this month is a negligible 0.1%, and that is really strong for the year. Been kind of posing the question: will it be a small positive movement? It is a small negative, but generally, when you track back over sort of previous Junes, ignoring the sort of the two COVID affected years when values went up, it's generally a small movement down of like 1.2%. So we're a percent stronger than that with what's happening in the market. And looking back at the whole of this year, it's been strong throughout the first 6 months. It's been a really strong first half of the year for dealers and for the wholesale market. So yeah, all pretty positive. Yeah.
Just give me a reminder of what's happened over the last couple of months. So zero point 0.1 in June. What happened in May and April and before that?
We had a couple of months of drops. We had a zero point 0.9 and we had a 1% in April and May, I think, and then but since the middle of May, it's hardly dropped at all. That sort of zero point 0.1 that we've had this month, we had similar in the second half of last month as well. So we've had a real strong period there. So we had a couple of strong months at the start of the year, but even we've been forecasting that the average movements would be 0.5% stronger than normal sort of seasonal movements for those months, and that is what's happening. So yeah, it's been strong, but I think this month does stand out as being stronger than the previous months as well, because you can start to get a bit of a dip off again as you get into the summer. May was stronger than expected when you've got bank holidays and things, but June just feels better really. It's just been an improvement. We've seen conversion rates that have been going up since April have gone up even more in June and gone up sort of a sort of steeper incline. So yeah, there's not a lot negative out there, but it does surprise me a little bit that we've got a small percentage movement down. So that's why you have to look at the detail behind all of that to see sort of why that's happened.
Yeah, I bet there has been some models in there and some age ranges that have probably gone up, have they?
Yeah, definitely. Yeah, and it's been a sort of real nuance in the market. Really, I was just looking at sort of things like the lower medium sector where you've got things like the Golf that have gone up, the C4's gone up, but then you look at a sort of a Giulietta and that's gone down considerably. So there's still lots of movement within there, and you can't get away from talking about EVs still. So yeah, there's plenty going on, but overall. Dealers aren't telling us it's brilliant. It doesn't feel like a 2020 or a 2021 when there was pent up demand. It just feels relatively strong. Some are saying it's just about okay. Some are reporting it a bit stronger than that. No one's sort of given us a negative view on life, and the data's certainly matching that. But it's not through the roof, and we're not expecting it to go through the roof.
Yeah, with our AI car dealership project that we're doing, and people can see those videos on this YouTube channel, we are dipping our toe in the water when it comes to used car sales. And actually, I've certainly seen that inquiries seem to be steady, and the dealers we're talking to on the podcast and on videos like this are all saying this year feels a lot more normal. It feels like we're back to a more normal market over those weird, strange periods we had during COVID and then after it. Do you think that's the case? Are we back into a more normal market now?
I think we are to a degree, but it feels. I guess some of the movements are normal, but I think it's stronger than that as well. And you've got to remember, there's 3 million used cars missing from the under sort of 4-year-old age because of what happened with COVID and semiconductors. So I think it's stronger than normal. I think coming out of Easter, April and May felt a little bit more normal, but this just feels a bit stronger than that, really. And then as we go through the year, it's interesting when you look at the figures. You look at what happened last year. At this point last year, values were very, very similar. They'd moved by a very similar amount over the first 6 months. And then we obviously had a very difficult last quarter last year, which it was fairly unusual, but the last quarter does tend to be quite weak. I think this year we're not really predicting that that's going to happen. There will be a softening in the final quarter, but not anywhere near that degree. So it has felt more seasonal, but it feels a bit stronger than seasonal. Would be my sort of sort of summary of that. Yeah.
That was certainly very painful, the back end of last year, and it hurt a lot of dealers out there, didn't it? And the fact that you're predicting that it's going to be stronger this year is certainly going to give a lot of people some confidence. Perhaps we could just talk about where there's some strength in the market. I mean, you've mentioned there a couple of sectors. I mean, let's talk about fuel types. Which ones are performing well?
The strongest fuel type is petrol, and again, obviously the manufacturers are focusing on EVs, producing more and more new EVs. There's a shortage of those cars, of petrol cars, from 3 million fewer than we'd have expected. If you want a small super mini petrol car, then you've got to pay the money for it now, especially in clean condition. So by fuel type, petrol has actually increased in value by 0.2% on average. Then you've sort of got diesel, which I mean, almost decimated in the new car market now, like the worst, the lowest volume of registrations out of all fuel types. That's gone down by just 0.2%. So that's kind of done okay as well. Then the hybrids, 0.2 for hybrids, 0.5 for plug-in hybrids. It's when you get down to electric vehicles, they've dropped by 1.7%. So electric vehicles continue to be the lowest, the weakest sector, weakest fuel type, but that is better than it's been doing over previous months. So there's a bit of stabilisation there. But again, it continues to be the weakest, and it's going to carry on like that because you've got some that are continuing to drop in value, and you've got others that are performing well now, and ones that were previously performing quite well, like the Nissan Leaf, for example. Now that's kind of been squeezed because values have all come down. When you go out to buy a Nissan Leaf for 12 grand, which looks really good value, maybe for a little bit more on your monthly payment, you can get a Model 3 now. There's all those sorts of things that are appearing. Everything's squeezed down, and that bottom end is now feeling a little bit more pressure.
Of course, we're talking mostly wholesale values here, aren't we? What dealers pay in the trade. So I just wonder whether those electric prices is sentiment with the dealers. A lot of those that we speak to are still not buying them, are still not confident in stocking them because they're fearful of the technology and fearful of the drops that may come as a result. Do you think that is what's dragging that electric kind of sector down a little bit?
Yeah, I mean, you certainly haven't got all of the dealers buying them. Whereas we've got all dealers buying petrol cars, obviously, and there's more of a bun fight for those types of vehicles. So certainly, when we've looked at sort of the volume or the percentage of independents that were buying EVs, it was like around 15% of independents were buying them. So there's a lot that aren't buying them. As you say, they've had their fingers burnt in the past. There's a worry about the technology. Will they be able to service them? And really, it's just I think it's more the volatility in the market, and can they turn them quickly? But there is a sweet spot under £18,000 on EVs. We are definitely seeing them selling, and we're also seeing them turning quickly in the market as well. So when you look at our retail data, those cars are selling quicker than petrol cars at that sort of price range, that sort of age. So, but it's when you get to sort of the more expensive EVs, 1 to 2 years old, they're then competing with new car offers, of which I'm sure you're seeing there's some really good new car offers. Manufacturers under massive pressure because of the ZEV mandate. There's a lot of manufacturers that are nowhere near hitting those targets. So yeah, price point EVs doing okay, but once you get to that younger age, more expensive, competing with new, that's when it tends to be a bit more tricky. And they're the ones that are sticking more on the forecourts, and that some dealers are reluctant to buy.
Yeah, there's some unbelievable deals out there for new electric cars, and I'm pretty sure that's going to continue as the year goes on, and that is no doubt going to affect used electric car prices further. What about the different ages of vehicles? How are they performing? I mean, in terms of prices. I mean, where is the strength in the market in terms of age?
So younger cars are actually doing okay, and for those other fuel types other than EVs. So at 1 year old, a drop was 0.2%. At 3 years old, as I say, it was 0.1%. At 10 years old, it's a 2% drop. So it's those older ages that are more heavily affected. But 2% on a 10-year-old car is about £75. So it's not much, but there's just it's probably slightly less demand for those older cars, and a bun fight for the prime stock. The fleet and leasing area of those ex-fleet and leasing cars, that's where the demand is really strong. and that's where we're seeing strong conversion rates. We're seeing we've seen an uptick in percentage of cap achieved for those sales when they're coming direct from the deeds, but also through the auctions as well. So direct from fleet and leasing companies, there's definitely been an uptick in that performance in July. So that's by age it is that top end, but again, 2% on a 10-year-old car is nothing to worry about.
Derren, give me some tips then on what I should be stocking up my forecourt with for the AI car dealership project. What would be best for me to be putting on sale at the moment? What's selling quickly?
It's a difficult one, really, because you're probably going to be what you want to do is you want to stock with what everyone else wants as well. So you then
It's
got
the
to
problem.
pay the premium for those. Yeah. So I mean, petrol super minis, petrol city cars, you can turn those quicker. Small SUVs, again, yeah, good. And dabble in EVs definitely, especially at that sort of price point range, because yeah, they will sell, and we've all got to be buying and selling EVs over the coming years, haven't we? That's only going to improve. So, but I think stick to your price points, stick to those sort of fast churning cars, and don't overdo it on the EV side yet.
Right, good advice there, Derren. I mean, finally, from yourself, what's going to happen next? I mean, what are we going to see as we get into the summer and the summer holidays?
I can't really see any reason to predict anything other than what we're having. When you look back again at our figures, the average move for July, during July, so in live movements, is just over a 1% drop. But you also get to see what happens in July is similar to what happened in June. I don't think we're going to see anywhere near that 1% drop. There's a potential that values could go up. That wouldn't surprise me. And I think we will see more of what we've seen in June. There's a bit of a myth around that elections affect values. They don't. When you look back at it, the Euros, big sporting events, Olympics, they don't really have an impact either. So school holidays can mean a bit of a slowdown in retail, but I just think there's not enough stock to cause too much of a downturn in value still. So we're predicting the next couple of months to stay relatively strong. As I say, could be a small uptick, and there will be some strength in certain areas. But again, that EV world likely to be volatile, and you need to look at the detail behind that and price points and those cars that maybe haven't come down by as much, or those ones that are at the bottom end that have been squeezed. And there's more desirable ones that are only slightly more expensive. Then there's a bit of a risk though in that area.
Derren, thank you very much, as always, for the comprehensive update. It's been nice to see you again. We look forward to catching up with you again next month. Thank you.
Thanks, James.
Super. Thanks very much. That's Derren Martin from Experts Cap HPI. Now, for the very latest on used car news, log on to cardealermagazine.co.uk. And for more videos like this one, make sure you're subscribed to our YouTube channel by clicking the link underneath this video. Thanks ever so much for watching. I'll see you next time. Goodbye.